Ladies and gentlemen, welcome to the main event.
Let's go.
Round one, fight.
Thank you for tuning in to the Crypto Street Podcast. Here are your hosts, Killer Whale, Prince, and Crypto Dale.
And remember to tip your waitress.
Hey everybody, this is Crypto Dale. Thanks for tuning in, Crypto Street Podcast. How we doing today? I hope you survived all that BitMEX drama last night. Today is Wednesday, the 22nd of August. Join tonight, will be your morning, because I know everyone listens on their way to work, etc. I'm with, as always, my California love child, or love brother, Killer Whale. What's up, buddy?
California love child. I like that. I haven't heard that from you before.
I was like,
it combines the Tupac classic with Love Child, which is interesting. But
like,
yeah, I'm doing well, man.
I just honestly said the first two words that came to my mind, and I looked at our screen and I saw Prince popped up, so I thought child, and then like you popped up, so then I thought just love with your trying to get across to everyone that hasn't seen you, Killer. Your stunning flow of locks that you have and everything like that. So how's the weather out in California in August?
It is a lovely 85 or so. It's been quite hot lately. Although it was hotter in Philly when we were there. Honestly, it's like a heavier, thicker heat.
Philly was thick. Yeah.
Yeah, Prince is not used to that humidity. I think we've talked about that.
Feeling pretty delicate out there
with Howard. But Prince, how's your night going, buddy?
It's been a good day. Fun to watch Bitcoin's action. We had a couple. They denied a couple of ETFs today all at once, and we got some pretty fun action. I think it dipped down to like 62.50, then popped all the way back up to 64, and so it's pretty fun to watch.
It's speaking of the whole ETF drama, it's funny. I think I put a tweet out earlier shortly after it got denied. Yeah. You saw people saying, this ETF's going to get approved, blah blah, which I did not think it was.
No.
And then the same people that thought it was going to get approved are like, Bitcoin holding strong. I think price denial was, or I think the denial was already factored into the price. It's like you can't be one. You can't be both. You're one or the other, guys. Come on.
That's social media for you right there.
Oh, and then I went and tried to call a couple of the guys out, and
they
deleted their tweets.
That'll never work.
But so tonight we're bringing to you someone that we're pretty excited to have on. We've been in talks with him for a while to get him on, just couldn't align our schedules, and finally able to. You can find him on Twitter, Pomp, and please correct me, Pomp, if this is wrong. It's Pompliano, or at Pompliano. We'll call him Pomp for the show if that's right. So welcome, Pomp. Thanks for taking time.
Absolutely. No, I appreciate you guys having me on. It's going to be fun.
So let's, how we always start out with guests is just kind of give a little background on yourself, how you got into crypto, what it was that is intriguing to you, what keeps it going, and then we'll just kind of go from there.
Yeah. So had a operating background, started and sold a couple of companies, then went and ran product and growth teams at Facebook and Snap, and then had started an early stage venture fund. It was investing in these, founders that were kind of pre-seed, seed stage, and saw more and more of them looking into the blockchain space, wanting to build companies there. My partner and I started looking. This is like early 2016. And frankly, we didn't really get it, right? I think that we saw kind of the ICOs starting to pop up, and the idea that we would give money to a company or an organization. They'd give us back this token, but it wasn't equity, it wasn't debt, and it wasn't a claim on cash flow. I think we were just kind of, thought it was a bad deal for investors, right? And there's just not a lot of protections. And so we kind of came out publicly and said, look, we're not going to invest in the ICOs, but actually there's a couple of other areas where we think are interesting. And so, I'm fairly familiar with the data center space. And what we noticed with mining was it was, the exact same thing. It was space with power hooked up. You put some hardware in there and, drive cash flow. And so we actually started out building mining facilities, ended up building 4 of them. And the nice thing about building these mining facilities is you think you're making an infrastructure investment. So, put some hardware in there, start driving tokens, and then you got to kind of work your way through the ecosystem, right? So, well, where am I going to, deposit the tokens? And, what wallet do I put it on? Okay. And so you go figure out all the wallets and how to set one up and do all that. Then it's okay. Well, what if I want to go to fiat, right? And so you got to figure out, about exchanges and what exchange does what. And, should you leave everything in Bitcoin or should you diversify into other tokens? And, you kind of just work your way through the entire industry to some level. And I think that we came out the other end and we were like, man, there's a bunch of stuff going on here. We should just go spend, majority of our time, if not all of it. And, down the rabbit hole we went and somehow ended up here on a podcast with you three.
It's funny how much mining is really what gets people going into the space at the start. So I know that was my first thing too, is just, let's just make a couple miners and let's just have some fun with this. And that seems to be like a pretty common entry story for so many people.
It's like, so there's usually two stories, right? One is kind of on the industrial side, like a data center type play. And then one is more of, somebody hooks one up in their house, right? And it's 1, 2, miners. And I always joke around and I say, the person who hooks up 1 or 2 in their house, it's like a magic machine, right? Like, wait, you just tell me like I plug this thing in and I make money?
Yeah. That's
okay.
Exactly it.
And then when you get to the industrial side, frankly, because of the data center knowledge, what was attractive was not only could we make more money, on the cash flow, but you didn't have to deal with customers, right? It was like the most amazing thing ever. You're telling me I get money and I don't have to deal with any of these customers? Like, sign me up for that business. So it's a great entry point, and again, I think it forces education, which ultimately is good too, right?
You mentioned that you were skeptical, you and your partner, on the whole cryptocurrency space. Was mining what helped you get over that skepticism, or was it something else that kind of made you fully buy into it?
Yeah, so I think that our skepticism was really around the kind of ICO, liquid token, active management trading, like all of that. Part of it is just personal bias, right? So I'm not a trader. I'm actually horrible at trading. I'm great at venture investing because it's illiquid, and no matter how emotional I get through the process, I can't sell.
Right.
Right. And so, we just knew, 1, that's not our skill set. 2, we don't have a unique advantage there. And 3, we've got, and still do today, tons of questions around the sustainability, et cetera. I think with mining, again, it was something that there was a parallel that we understood. So an infrastructure investment. And in the traditional kind of non-crypto world, you end up getting a 7, 10, maybe 12% annualized return. What we saw with mining was, you could do that in 1 month.
Yeah.
And it did in every month, right? And so this idea of a higher yielding product with the same risk profile, I think just kind of, played itself into our mentality, our philosophy, and then, kind of off to the races from there.
Yeah. Did you start out mining just Bitcoin, or did you kind of hop around and mine smaller coins and try to get a head start on those, or what was the strategy when mining?
Yeah, so the first couple of machines were Bitcoin, but really kind of the aggregate majority ended up being Ethereum. So we went with GPUs, and it was just all out of ease, right? So we just had access to some GPUs. Had somebody who was able to help us there, kind of get started. What should we buy? How do you actually set this stuff up? And I think it's pretty fascinating too. Like, I have this belief that majority of people actually like to tinker with things, right? Now we live in this like technology-driven social media world where everyone wants to stare at a screen all day, and we're all addicted to our phones and all this stuff. But if you take all that stuff away from somebody and put them in a room with like Legos or a computer and tell them, take it apart, for the most part, like a lot of people in technology actually really enjoy doing that stuff. They just don't get a chance to do it that often. And so mining was, somewhat like that, right? It's, hey, you're going to put together the GPUs and hook them into the motherboard, and you go through the whole thing. And so I think that if we had just done ASICs, you don't get that same level of like tinkering. Yeah. And so I don't know how much time we would have spent. And so it was, blessing in disguise on the GPU side.
There's something satisfying about solving a puzzle and tackling something you don't know or are not familiar with. And it sounds like you've had a very successful background even prior to crypto. So is that kind of one of the aspects of crypto that has kept you interested in it and going in it? Is that it's a complicated onion where you got to peel back a lot of layers?
So I think that the complexity and the diversity of experience, skill set, perspective, all that stuff is attractive. Again, when we first got started, I think it was this idea of we could actually apply investment strategies that we understood to this new technology and drive a return, right? It's kind of the whole capitalistic human greed factor that I think probably drives a very high percentage of people into the space. But then I think the part that kept us, right? So kind of came for the returns, but what kept us was this idea of, wow, you actually can start to really decentralize a lot of things that we know are corrupt, or bad actors, or inefficient. And so once you get into that world, you start to realize, what does the financial world look like without centralized banks, right? What happens if the U.S. Government no longer has their printing press and can press a button and just print money?
Yeah.
And as you get into that world, you start to realize there's even more things that I don't trust than I thought previously, right? And so if I can start to participate in an ecosystem that is decentralizing some of this stuff, or at least distributing power in this really interesting way, that I think really takes over as the fascination. And then it becomes much more kind of philosophically driven than just, capital driven.
Hey, Pomp, let's talk about the ETF here quick. I saw you. I'm trying to pull it up here as fast as I can. I saw earlier you put, it was a couple hours ago, so obviously it was after the ETF denial. You said the Bitcoin ETF, you tweeted this, the Bitcoin ETF is unlikely to get approved before there's a qualified custodian. Stop worrying, the market infrastructure isn't ready yet. Can you elaborate on that a little bit and maybe give your thoughts on what needs to be in place for the Bitcoin industry, or the crypto industry, to be ready for something like this as a whole?
Yeah. So look, the ETF, I think, is it's a retail product that kind of serves two purposes, right? So hopefully it will allow a subset of investors who may or may not already have exposure to cryptocurrency to purchase cryptocurrency in a format that they would like to, right? So either out of their certain brokerage accounts, retirement accounts, whatever. The second thing that it does is it brings a level of sophistication, validation, and maturity to the market, right? So for an ETF to get approved, you're going to have to be able to custody the assets. You're going to have to be able to audit the assets and kind of the balance sheet, et cetera. And so I think that everyone is really, really focused on accessibility, right? And it's like, oh, ETF, they pull up the gold chart, right? And I've looked at it, and maybe that happens, right? Where all of a sudden the underlying asset just explodes in value, but maybe not, right? But accessibility is definitely a piece of this. I think the part that is actually holding back an ETF approval and kind of mass adoption is we today don't have the infrastructure in place for a qualified custodian to have an ETF, to be able to assure regulators and investors all of the necessary protections and risk mitigation factors that are needed for this to be a publicly listed vehicle that non-accredited investors can purchase. And so until we have that stuff, I don't think anything's going to get approved, right? And frankly, I don't think that it should be approved, right? Because there's a level of professionalism that comes from, this level of professionalism that comes with an ETF product. And so if that is possible, we should go ahead and do that to make sure that we uphold that standard.
I'm curious, Pomp, question for you. Given that you have a background in venture capital and I'm sure a lot of experience dealing with newer ICOs and newer crypto projects, what are some of the biggest mistakes that you see new crypto projects make?
There's two things. One mistake that I see is the idea that fundraising is a finish line, right? So there's this huge effort that goes into how do I raise as much capital as quickly as possible, right? And the example I always go to is tell me one startup in the traditional tech world that raised hundreds of millions of dollars or even tens of millions of dollars as the first round of capital with less than 10 employees and was successful in a sustainable way. There's a couple, right? But the number of them is very, very small, right? And so I think that this idea that not only is there a race to raise as much money as possible, then founders kind of celebrate, right? Hey, we raised, $50 million.
Yeah, let's go party.
Yeah, well, guess what? The $50 million is actually in the traditional, world outside of crypto. $50 million is just your right to go to the starting line. Right now, you got to go build your company. And so, the way that a lot of this capital got raised, right? So, in defense of founders, and kind of the flip side of the argument is it got raised in a non-dilutive way, right? So, if you look at like EOS, for example, EOS ended up booking it all as revenue. So, like, they did $4 billion in revenue. Like, for some companies, that is the finish line, right? And so, I think kind of thinking of, how is the company treating the capital raise is really important there. So that's problem number one, just, fundraising as a finish line. And I think the second thing is when you're this early in a new technology, you have a bunch of technologists that are tinkers and hackers, right? And from a approach, a mentality, and a philosophy. So what that means is everyone's trying to figure out what can I make the technology do, and then they're showing it off to others in the community, right? So hey, I made higher transactions or faster transaction speeds, or I made this do X or Y. But what happens is everyone takes their eye off the ball, right? It doesn't matter what you can make the technology do. What matters is, can you get people to use what you build, right? And so in that case, I really spent a lot of time with founders asking them, don't tell me about the technology you built. Tell me about the solution that you're building, right? So cool. You want to build money, for example, right? If you want to build digital money or digital currency, does anybody care whether it's a blockchain or some other database-like technology underneath? Probably not, right? The mass consumer does not care what the underlying technology is. They want a digital currency that works, right? And solves for what they want to do. Now, in many cases, blockchain, right? So digital currency and other use cases, blockchain happens to be the best technology available. But in some cases, that's not true. And so I think that we've got to get away from this idea that, the best technology wins or technology kind of, is the say all be all. And we've got to get back to this idea that you still have to build things that solve people's problems, and you still have to get people to use your products. So I think it's, fundraising isn't a finish line. And then two is like, if you build things and people don't use it, nobody cares.
I think that's a problem at the crypto space is, Coinbase has dealt with the usability problem in a large way. It's fairly user-friendly, but some of this stuff is still like completely archaic feeling, right? I just think even like addresses in general are a thing that it's going to be tough for people to get a hold of. We kind of get it because we're all millennial-ish, younger people who are fairly affluent with tech. But a lot of this stuff is like completely out of the worldview. And I think it might just take some time. No matter how friendly services may be, it's going to take a while for people to digest this stuff and use it with frequency and with comfort, I think.
Absolutely. If you think, so wallet address is a great example, right? We've been looking at a bunch of stuff where, if you think about Venmo, for example, right? I send money to my friend's name, right? To a username. And there's some, level of trust and validation that, yeah, that is my friend and, et cetera. But there's a little bit of magic that goes on there, right? I'm electronically or digitally sending money to my friend's username. Well, in the blockchain world, if I'm sending money to a digital wallet, 95% of people, probably more than that, couldn't tell you what their wallet address is off the top of their head, right? And so their friends definitely don't know it, right? And can we get to a world where there's some sort of naming convention that is linked to those wallet addresses? Similar. I think a lot of it like domain names, right? If you think about IP addresses and domain names, really all the domain names are doing is making it easier for dumb humans to use computers. And so right now we're in a world where wallets are great for the use of for computers to use. But we've got to figure out a way for the dumb human to be able to use this digital wallet, decentralized, financial system, and have a lower error rate, right? I don't think that we're there yet, and so that's a great example of technology is awesome, right? I wish everyone could have a digital wallet, participate in this, but we got a lot of work to do on the usability and adoption before I think it can really reach its full potential.
You're kind of in a good spot where you're in that intersection of traditional markets and then also crypto. And so you get to kind of see, both worlds and how people are thinking. What, in your experience, how do some of these individuals in, the traditional markets, what are their thoughts? What's the kind of vibe you get when they kind of talk about crypto and so on?
Yeah, so I could talk specifically about like institutional investors, right? So these are usually people who manage pretty large pools of capital. They're fairly sophisticated. Rarely is the money theirs, right? So they're acting in a fiduciary capacity, and many times it's a foundation, it's a university's endowment fund, or maybe it's a pension, right? So you deal with people's retirement, stuff like that. And in those cases, I think that what we've seen is you've got a couple of things that they're interested in, and then things that they're still kind of uneasy about. So the things that they're uneasy about are cryptocurrencies and the actual digital assets themselves, right? So to walk in and say to an institutional investor, buy Bitcoin, there's a really big uphill battle there, right? Because they don't understand what Bitcoin is. Should they have this? It's highly volatile. Is it going to go to zero, right? There's just these questions that, again, they're starting from a low base of knowledge that they've got to, kind of accelerate to get comfortable with deploying somebody else's money into this asset. And so you see that not only with Bitcoin, but kind of all liquid cryptos in general, right? So if they're not overly excited, in kind of any real way for the liquid cryptos, what are they excited at, right? Well, if you think what an institutional investor does is they allocate capital into a portfolio, right? So they construct a portfolio that is supposed to drive what is called an assumed rate of return, right? So they sit down and they plan and they basically say, look, we got $1 billion that we manage, and every year we need to drive a 7% annualized return, right? So that's their assumed rate of return. And they begin building a portfolio to get to a 7% annualized return. So maybe they go, 30% equities, 20%, into credit opportunities or lending, maybe some fixed income, some real estate, and they go down the line. Well, if you walk in and you say, hey, you should invest in crypto, the first question they ask is, what pool of capital should it come out of? It's not an equity, right? In terms of public equity, it's not lending, it's not real estate, it's not fixed income, right? So there's some challenges there in terms of what pool of capital. Now, some of them have exploratory budget, and so they say, hey, I'll go play with kind of this high risk exploratory pool of capital. But then the second thing is, if they don't understand the asset, you're kind of fighting two battles there. So given that model of capital allocation into portfolio construction, what ends up being really strong, pitch to them or kind of conversation is, well, you already have a equity bucket. So what you should do is you should buy equity in companies in this space. Similar to how there's a healthcare venture fund, right? It's a venture fund, it's venture capital, it's an asset, but it's in the healthcare space, right? A crypto venture fund is merely venture capital fund, so same asset, but it just happens to be focused on the crypto space. So that's a very easy thing for them to say, okay, I know what pool of capital it comes out of, and I understand the asset that I'm buying, right? So that's an easy sell. Or not easy sell, but just easier to understand, right? From a theoretical standpoint.
Yeah.
Then you look to lending, right? So doing asset-backed lending with, Bitcoin or some other crypto asset as the collateral, right? Okay, you check the box there. Then you get into like tokenized securities, right? So the idea that I could buy tokens that represent equity in real estate, right? Again, super interesting there. And so I think what you end up doing is you walk through all of the different sleeves of capital that they have. And as you walk through those sleeves of capital, you find that there are certain types of assets available in the blockchain and crypto space that match up really nicely with what they want to deploy capital to. And so they're not going to go deploy 100% of that capital tomorrow into blockchain, but what they're likely to do is go ahead and deploy, 25, 50, 100 basis points into it as an early test. And then if it goes well, they'll kind of continue to allocate more and more capital over time.
What, in your opinion, you look at crypto, there's a lot of garbage clearly, but what are some of your favorite sectors or some of the more useful aspects of crypto that you find most promising in the next few years?
Yeah, so I wrote something a couple of weeks ago about while all the volatility in the liquid market's going up and down, right? And mainly down this year, right? There's a couple of companies that are just absolutely printing money. And they're all infrastructure companies, right? And so the classic analogy is you go back to the gold rush, right? And some people were able to go and they speculated and they found gold and they got rich. Some people spent a lot of time digging and they never found gold, right? So that's a kind of a binary type strategy. But the people who made a lot of money were the people who sold the picks, the shovels, the blue jeans, etc. And so they didn't actually care if anyone found gold, right? They were selling things that everyone had to buy if you wanted to go look for gold. Well, we move to the crypto space, and what you end up finding is the exchanges, the wallets, the mining facilities, the data providers, right? All of these types of companies that are true infrastructure for this world are going to be, are they're going to have a higher probability of being successful in a more sustainable and predictable manner. And so I think for us, we're happy to give up upside to have a higher level of confidence that we're going to make money in an investment, right? And I think that's a little bit different than some other people in the space who they're all in or they're going to zero and they're comfortable with that, right? I don't think that's really kind of because we're deploying other people's money and acting as a fiduciary. That's not really what we're looking for from a risk return profile standpoint.
So, Pop, let's talk a little bit about. You don't have to dive into grave detail, but what are your current thoughts on the market? Where do you think it's going? Just kind of stuff like that, general high level stuff.
Yeah. So look, the thing with all of the price movements and kind of price predictions is you got to do two things, right? One, you got to pick a price, and then two, you got to pick a timeline. And so I think that's really hard to do both consistently well, right? And I think with crypto specifically, that there's kind of two that I always look at, right? So one is the price of Bitcoin, and then two is the overall market cap of the industry, right? And so I am now infamous to some degree for saying that in January of this past year that I could see Bitcoin hitting as high as $50,000 this year, right? And so during that. When I got asked, I said, look, I got a 30% confidence level that could happen this year, right? I think as the year's gone on and we've run more and more models and gotten access to better, cleaner data and just more robust data sets, right? I actually have started to temper what I think, but it's less about the price, right? So I still have a very high degree of confidence that at some point in the future, Bitcoin will hit $50,000, for example. But I don't think it's going to happen in the next, 3.5 months, right? I think that it's much more likely to be like over an 18-month period. And so you can see from, January to today, you end up getting movement in my prediction, not from the price, but the timeline it's going to take to get there. Right. And so I think that what we're going to start seeing is as the industry gets cleaner data and with these more robust, easier to access data sets and investors can start to build kind of just better, more reliable models, we'll start to actually get better at understanding price movements, price predictions, et cetera. And so, long-term bullish, short-term, I think we're going to experience even a little bit more pain than we have. And then we'll eventually, kind of get up to where I think people are hoping that this all goes.
Hoping and praying, I might add.
Yeah. I was reading a really, really good article today on Medium. I think Bacon Chain actually helped write it, but it was basically about that classic Wall Street bubble chart that we've all seen, despair, hope, return to the normal, yada, yada. But it was overlaying that with all the different Bitcoin cycles. And the similarity is remarkable. I mean, almost every single cycle, the 4 big bubbles that Bitcoin has gone through, and that was kind of interesting to me that it's gone through 4 bubbles, because I'm new enough to this space where I think of the 2013 bubble and I think about now. But in that, in the estimation of that article, we have probably a few months of ugliness or flatness and then a start to return to that kind of slow uptrend that we've been experiencing for a while. But Bitcoin is interesting because it's really one of the more pure markets. I think there's not a good way to value these things yet. So it's really sentiment and emotion, and it's interesting to see how that plays out.
Yeah, I mean, look, so I completely agree with you that we've seen this happen before, right? And so if you think through, kind of one of the first crashes in, it was like kind of 2011, 2012, it's probably 150, 160 days of the bear market, right? And so kind of from peak to trough there, you get about 150, 160 day drawdown, right? Well, if you go to the one in 14 to 15, you end up getting in, it's like 400 days, or a little more than 400 days from peak to trough. And so what ends up happening is you are driving these same parabolic runs and, kind of pretty violent drawdowns over and over again, right? As you build out the network and the network effect. But what ends up happening is the timeline at which these cycles occur gets stretched out, right? So you can imagine, take public equity markets today. Well, cycles happen over 10 and 15 years, right? And so if let's say Bitcoin started out in the first kind of bear market was 160 days. Well, is there some point in the future, 3-4 decades from now, where actually the bear markets are 8 to 10 years? Maybe, right? And so if that's the type of growth that we're going to see here in terms of a network, et cetera, I think that people have to just take really, really long time horizons. And then two is they've got to remember, with a bubble, part of the beauty of a bubble is the fact that the bubble only really works in terms of being able to get to the next kind of bull market when people forget about the last bubble, right? And so if you can't have a bull market, a violent drawdown, and then 2 weeks later go back into a bull market, right? That it just doesn't work that way, because the violent drawdown is too fresh in people's mind. And so I think the psychology of a lot of this is really important. And so I wouldn't be surprised if we go. I literally think we could get as far as like end of summer 2019 and still be sub $5,000, right, for Bitcoin. And if that happens, I think you're going to see like true capitulation in January, February of 19, right? Like people are going to say, listen, we just went through over 12 months of a bear market. It's not turning around, right? And so you'll start to see people forgetting about it and then all that stuff. And then that's really when 19 going into the halving in 2020, et cetera, then you'll start to see kind of that recovery, I think.
So I want to hear your opinion on this and your thoughts really going forward for it. Tokenized securities. I think it's kind of a fun topic for a lot of people to chat about. There's a lot of kind of hype around it. I want to hear your thoughts on it.
Yeah. So in the traditional finance world, you can own 4 assets, right? You can own stocks, bonds, currencies, and commodities. Those are the only 4 types of assets you can buy. Every other asset that you buy is a form of a stock, bond, currency, or commodity. Mm-hmm. In the digital financial world, or finance in the digital age, you can own digital stocks, digital bonds, digital currencies, and digital commodities. And so we've already seen the digital currencies, we've seen the digital commodities, right? I think we're starting now, I think it's Berkeley or somebody's trying to do like a municipal bond that's tokenized, right? So you start getting into the digital bonds. And then we're going to see digital equity, right? Digital stocks. And so again, as much as we say we're going to decentralize the world, we're going to, tokenize the world, all this stuff that, look, I've been a huge contributor to kind of drawing attention to, we're really going to end up in a world that looks very, very similar to the non-token or non-digital world. The hope is that the technology, or the promise of the technology, is it's just a more efficient, a more global, and hopefully a more transparent world where individuals are empowered to participate without the fear of, either rogue central authorities or the, inability to participate because of some, governmental interference, et cetera. And so, it's exciting. I think that, tokenized securities will happen, but I think we got a long way to go again to build out that infrastructure to actually see that come to fruition.
I wonder if they'll end up replacing pretty much all stock issuance, because it's just such a clearly better system or a way of like just doing stock issuance. Right now you make an account at TD Ameritrade, and that your statement says you own 10 shares of Facebook or whatnot, but it's not like set on an immutable ledger. And I just think that system is going to be so much better for those sorts of things. I think like that market alone is gigantic. And I need to do more research on securitized tokens. But it seems like one of the more obvious use cases of crypto.
Yeah, look, it's one of these things where the incumbents are heavily incentivized to keep the system operating how it has been for the last, couple of decades. The difference is if the technology is built in a way that creates a better user experience and solves problems that exist, the incumbents cannot stop it, right? And for example, Uber is a great example of that. People have always wanted to get from point A to point B, and there's taxis, and taxis are great, and they help people for decades. The second somebody figured out you can use the computer in your pocket to press a button and it comes right to you, and it's going to be cheaper and more efficient, all that stuff, everyone tried to stop it, and you can't stop it. Not because the government gave up in certain cities, it's because the users wanted the better product, right? Same thing's going to happen in the equity market. Now, here is the caveat to all of this. There's regulatory organizations and a regulatory environment that has very serious consequences if you step out of bounds. So what we've seen with kind of the ICOs and the non-dilutive capital raises, all that kind of stuff, it remains to be seen how aggressively that will be enforced by some of those regulatory bodies. There is no doubt in my mind that if you come out and you say, I have a token that is a security because it is equity in a company, and you violate securities law, they're going to enforce, right? Mm-hmm. And so, one thing that I'm constantly telling founders is, we as investors, as the media, et cetera, have done a very poor job of preparing these founders for this, highly regulated securities market, because we've always taught founders that, if you just try hard enough, if you just build something that people want, you can change the law. So Uber beat the taxi unions, right? Taxi regulation. Airbnb beat the housing regulations, right? So it's just, just build a great product and, the world will conform to your vision. Well, that's true in a lot of areas. That's not true with securities law. They will fine you or they will throw you in jail, right? And so I think that, kind of my warning is, as exciting as the technology is, as kind of, bullish as we are, at Morgan Creek, there's still this, word of caution, I think, to people around, just make sure you're doing it the right way. Make sure you've got lawyers that are looking at this stuff and just be careful, right? Be patient and careful. And if you do that, I think that you got a fighting chance to kind of benefit from a lot of this.
Kind of touching on that whole topic of, regulatory bodies and all that. How do you see that going forward with crypto? Because I know crypto is kind of this area where we have a lot of people who are like, hell no to any kind of regulations. But yet I think really if you want to see the space advance more and more and get more money into it, it's probably going to be something we need realistically. What are your thoughts on that?
Yeah. So this is one of the things that my partners and I always kind of joke around about. So if you think about regulation, right, it's a form of law, right? It is a social contract to a degree of people who all agree to live by a certain set of rules. And so the same people who say that we shouldn't have any regulation are the first people to call the police if somebody attacks them, right? And so the action of calling the police, right, is essentially them saying, listen, some rule of law is good, right? Mm-hmm. Now, if it's overarching, if it's erroneous or egregious, right, then obviously we need to deal with that. But some rule of law is how we live in a civil manner, right? If you move that to regulation around securities, some rules are good, right? So the idea that you should not be able to fraudulently sell equity in a company to an investor is probably a good rule, right? That's a good investor protection. Now, how that gets enforced, what is the definition of fraud, all that stuff is the nuances of the rule, and so that's got to get figured out. The one rule that I look at that I think is just absolutely asinine is the accreditation laws, right? Mm-hmm. And so I'm pretty bought into the idea that regulation's good. We should have regulation, and I'm passionate about this accreditation law because it's the promise of the American dream, right? So there's a lot of people, a couple of my grandparents came to the United States as immigrants, right? Obviously, I've got a bunch of friends that are immigrants or their families are immigrants. And if you ask these people, why did you come to the United States? It's the idea that regardless of who you are, where you're born, what language you speak, if you put in the work, you can make a good living, right? You can take care of your family and you can live a happy life, right? The pursuit of happiness. And so with that, what we have done with accreditation laws is we have literally written into law, rich people get richer, right? We have said the highest returning assets that are available to any investor are only going to be available to people who have a certain financial status, right? They have to make $200,000 a year. They have to be worth $1 million, right? We're by law boxing people out from the best investment opportunities. And so the idea of the rich get richer is written into the laws. And to me, it's a violation of the American dream, right? Now, what's the solution, right? So I'm a big believer that if you're going to complain about what's existing, you got to have a solution. And if you look around the world, there's solutions that exist. So in Europe, for example, there's an opt-in system. This idea that I can tell you either I'm sophisticated or I'm not. If I say I'm sophisticated, I can invest in pretty much anything and I have very little investor protections. But I told you I was sophisticated. If I say I'm not sophisticated, the number of things I can invest in is drastically reduced, but the amount of investor protections is drastically increased, right? So if I'm an idiot and I'm not sophisticated and I say I'm sophisticated and I lose a bunch of money, that's my fault, right? I opted into that environment. And so I think that's a really interesting way to look at, this accreditation or sophistication. Another model is, well, why don't we just have a knowledge test? I don't care if you're the poorest person in the world. If you've put the work in and you understand how to buy and sell and invest and risk and all this stuff, you should be able to invest in whatever you want, right?
Yeah.
That's just not what's happening right now. And so I think that, is there a short-term fix? Probably not. Is this going to get addressed in, any, reasonable time frame? Probably not. But I do think that crypto is the number one asset currently that is forcing this conversation into the mainstream, because what you're seeing is a world where non-accredited investors are buying an asset that has a high volatility. And so when that happens, I think that regulators are going to have to start to answer some of these questions because there's just too many people asking the question now.
I got a kind of a more specific question for you, Pomp. I've seen your interactions with Jim O'Shaughnessy on Twitter. He's a guy who I followed in traditional finance for a long time. Very smart guy. What has that been like talking with him about crypto, if you have it all?
Yeah, man. Jim is awesome. So I've been fortunate enough to spend, obviously the time on Twitter with Jim, and then I've actually spent some time with him in person. And here's kind of my three takeaways with Jim. And Jim is very similar actually to my partner, Mark Yuska, right? So they both kind of come traditional asset management, manage billions of dollars, et cetera, right? And Jim specifically, the first thing he will tell you is, I don't know, right? He'll just come out and say, look, I don't know enough about this to have any sort of intellectual kind of detailed conversation, but I'm comfortable enough and I'm, intellectually honest enough to tell you I don't know. And so one, you got to respect anybody who can walk into a room, right, and not be, kind of egotistically driven and just say, look, I don't know enough about this. I'd love to learn from you. I can give you my perspectives, but I don't know. So I think that's one about Jim. The second thing is, Jim and Mark also, they've just been around a really long time, right? And some of it is just the benefit of, being older. So they just had more time. And then two, they just done a lot in their careers. And so what you end up seeing is they've just seen so many different economic cycles across asset classes that they can literally pick this out. And so the idea of taking the classic bubble chart with, kind of capitulation and all that stuff, they've lived it like multiple times across asset classes. And so what they end up seeing is like, as soon as you start to see, X, Y, or Z occurring, like, you're going into that bull phase. And it's just a pattern recognition. So I think that's really valuable. And then the third thing that I find quite interesting is most of us, I think, here are relatively digitally native, right? So, kind of grew up with phones in our hands, computers, this idea of, messaging each other, in kind of a 24/7 world, all that stuff. These guys did not grow up that way, right? And so now they're experiencing the benefits of the technology. And what you're seeing is their eyes are opening, right? So they're able to combine this experience and perspective from kind of the non-technology world to now coming into the technology world. Not only one, is it more enjoyable, but two is they just understand at a different level what fundamentally drives a lot of the things we use on an everyday basis, right? Not because they understand, how does the iOS, app store work, but they literally remember when people were digging up ditches on the side of the road and laying, fiber optic cables. And so like their ability to tie all of this together, right? It is, age, experience, and frankly, wisdom.
All right, Pomp, last question, and we always save the most serious, the question everyone's dying to know for last, okay? Has anyone ever told you look like Aaron Rodgers?
So
I see it.
There's two people that, and not very often, right? So this is not a common occurrence, but I've gotten Aaron Rodgers a couple of times, and then I used to have a shaved head for most of my life, playing sports and stuff. And whenever I'd go overseas, everyone would always call me Jason Statham. And so my brother would be with me on, we went to India and some guy called me Jason Statham. My brother looked at me and goes, dude, how much did you just pay that guy? Right? He's just like, get out of here.
Don't you wish so?
Yeah. Look, he's got a cool accent, right? He's badass in the movies. Sure. But no, the whole celebrity doppelganger, right? It is pretty funny because, some people, look like identical twins. But everyone kind of looks like somebody, right? Yeah. So it is cool.
Yeah.
I look like John C. Reilly, wouldn't you agree?
Yeah, it's almost scary how similar.
Oh.
Well, Dale, at the conference, somebody was like, they were like, Dale, you look pretty much exactly what I thought you would look like.
I know, and to elaborate on this a little bit, someone asked me earlier today, they're like, Dale, you don't have a neck beard? And I'm like, I don't know why everyone on Twitter thinks that I have a neck beard and am a basement dweller. It's like, come on, guys. Well, so
hey, you are in your basement right now, though. Let's be honest.
But I come out every once in a while. So
one of my favorite guys on Twitter is I think he changed his Twitter name. He's now Bully ESQ, right?
Oh yeah, and he's a good friend.
And so Bully is. For the longest time, when I would talk to some of our investors, like, where you get information, he'd be the one I bring up, and I use him as an example. I'd say, listen, you got this guy on Twitter who will literally in the same day tweet about, Bitcoin's going to the moon to, somebody's getting wrecked today to, I'm going to drink, 40 beers tonight, right? To, basically telling somebody off on the internet. And he did all that in 3 hours. And then you find out he's a corporate lawyer. Right? Yeah. Like that summarizes crypto Twitter to me, is the ability to talk about all kinds of intelligent things, all kinds of stupid things, and then go to work and have like a serious life that most of the people that work with you probably have no clue about what you're doing on the internet.
Yeah, it's funny. Bully's, to piggyback on that,
we chat with him quite a bit.
He's probably the
really
funniest person that I follow, and probably the funniest person I know in real life too. So. Did you want to pump any, or not pump, but did you want to talk about your newsletter at all, Pomp, before we wrap any things up? Do you have any closing words here?
I'm offended that you used the word pump and not pomp, which seems to be all of my followers' new. They literally every day, no matter what I tweet, it's just pomp it, right? Which is makes me laugh every time now. No, man, the newsletter's cool, right? So I was writing I basically was writing a summary. It started out as for some of the guys internally, and then we started sending it to some of our clients, institutional clients, etc. And now we've made it available to anybody. So if you just go to my Twitter account, it's linked there off the chain. And I try not to sound stupid every morning, but sometimes I write it at like 6 a.m. and I'm just like, Jesus, what I don't know I don't even know what I'm.
Haven't had coffee.
I don't even know what I'm saying right now. I think I spelled everything right. Yeah. But people seem to not hate me yet, so we'll keep going until that happens.
Do you have a guy that comments on everything you say that just says dump it?
I don't know who that guy is, but there is a guy who does.
It's Joey, guys.
Oh, Joey. Okay, yeah.
It's Joey.
Yeah, so shout out Joey and all you other guys in Architect. So Pomp, thanks for being on. I know you're a busy dude. Thanks for taking the time out of your schedule to get on and talk. I think everyone will, like a lot of them, everyone will learn something from this episode. So thank you.
Thank you.
Absolutely. No, guys. Thank you guys so much for doing this.
Thanks everyone for listening. Tip your waitress. Don't send any rain to Iowa, please. I just got my basement dry, so thank you. Take care, everyone. Stay safe. Peace out.